What's up, traders? Matt from the Trade Brigade here doing a technical analysis on ticker symbol NVDA for NVIDIA Corp. On the left-hand side, we have the daily time frame, and on the right-hand side, the 30-minute intraday time frame. First things first, this will, of course, be an update. We talk about this stock regularly here on the channel. The main thing to discuss is the fact that we are technically breaking out of this area of balance right here. We are no longer in the midpoint of the range, as we mentioned on the weekly video from Sunday, yesterday, and things are looking good for continuation higher, right? There's a lot of pent-up energy in here, especially people who are short late to the party, who are going to start feeling some pain now that we're up and over roughly 240. The next big target is 257.68 from the daily, simply because that's where the low was. We got an equal low, and that's where the selling really accelerated from. So to the upside, that's the big one to be watching out for, and then it's 272.25 coming from the resistance trend line as well, right? That is a bigger flush point, but more important in terms of structural integrity, rather, up around that area. So there is some solid overhead resistance. Don't get me wrong, we still are in a daily downtrend right here, but we are breaking out of this little area of consolidation to the upside. We don't want to fight that too hard. If we take a closer look at the 30-minute time frame, you can start to see this as a bit of a bigger double bottom. On an hourly, it might look a little bit more clean, but basically now that we're above the neckline, that is the must-hold area around 240 as we've discussed. As long as we do something like this and hold it for a higher low pullback, things are fine looking for some more upside. If we're to do this and fall back down underneath 240, then technically what we have is a look above and fail of a range, and we would expect that the low end starts to become the target at 220. Again, as the chart has closed right now, it wouldn't suggest that that's a likely possibility. However, be open to everything in this volatile market that we've been experiencing. If it starts to go lower, right, obviously the midpoint of the range here is going to offer a first target. I wouldn't be overly aggressive to the downside. So let's go 229.50 as the first target on the look above and fail if it pans out in the first place, and then your double bottom lows closer to 220. To the upside, we talked about those overhead levels on the daily time frame. That's really going to wrap up the video. If you enjoyed it today or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget our main channel is linked in the description, and all of that being said, I wish you a green trading week.